Right, hello everyone, and welcome back to another episode of ICT Concepts in Crypto. In this video, I'm going to be covering one of the most important concepts you can hope to learn if you want to be successful in trading Bitcoin, and that is the relationship between correlated markets and how the performance in certain assets, or otherwise known as correlated markets, have a direct impact on price of Bitcoin, right? So in order to demonstrate this, I'll show you how high impact news events trigger volatility in other markets that can have an effect on Bitcoin. And for our main example today, we'll be having a look at the relationship between the dollar index, the S&P 500 index, and the Bitcoin index. So one thing we can note when we um, dissect the intermarket relationship is we're going to notice how volatile these moves can sometimes be, but I will give you some tools that you can use to help you set potential targets. And then towards the end of the video, we'll jump over to the Telegram channel and I'll just give you some examples of what we're doing over there. Basically how we're engaging with price and how we are able to look under the hood, so to speak, in Bitcoin. So I'm busy in the process developing some learning modules, particularly related to scalping and having a look at basically those indicators that you don't normally get to see and basically how to read them. So I've been posting updates pretty much on all of that as it's happening, so you'll get to see what's going on there. So we have some awesome guys over that side, and they seem to be really passionate about learning, which is awesome to see. And so I'll extend an open invitation for anyone interested in learning more about ICT concepts in crypto, but also about my own unique styles, which I've developed for trading Bitcoin particularly. So I use a lot of ICT's concepts as extra confluence when it comes to trading Bitcoin, particularly his opinions about narrative and frame bias, um, things that majority of people don't normally look at when they trade Bitcoin. And I think it gives us a massive advantage when it comes to beating out our competitors. So definitely stick around for that, but otherwise, let's get into it. So the first thing I always suggest people do when they want to trade Bitcoin is to familiarize themselves with the current economic climate. As in that, for me, involves having a look at what the dollar is doing, the dollar index, and having a look how the S&P is performing. So going into Wednesday, here on the dollar, we anticipated a bit of volatility, namely the fact that we had those high impact news drivers coming out at 8:30. You can have a look on the right hand side, you'll see them. So we'll have a look at how that affected the dollar index, and as a result push price on S&P down into some uh, lower liquidity levels, um, which led Bitcoin along the same path. Now the first thing I want to draw your attention to is this box here. So this is between 7 o'clock and 11 o'clock. Now when it comes to trading Forex, uh, the New York kill zone begins at 7 and ends at 10. And over in the stock market, the kill zone extends from 8:30 to 11 o'clock. Okay, and for this example, I'm just going to keep your attention to 8:30 to 11 o'clock. So we know at 8:30 we have the news embargo lifts and we have the release of that news. So on Wednesday we had the release of some inflation year-on-year numbers. So they came out and they were quite a bit worse than expected, but that doesn't really matter. The main fact is that those were really high impact news events, and we can see them reflected in the chart. So first thing I want to draw your attention to is how price breaks down after the New York Open. First create the small sort of Judas swing, and we expect some accumulation of positions above the New York Open. So price traces down, stops here, namely at the previous week high. So this was previous week's high, but most importantly, if you have a look, this chart is the euro dollar. So as price is coming down to the previous week high, it's also retesting that big psychological $1 level, okay, that holds its support. So we get quite a big move up from the previous week high as the euro dollar gains some strength and finds support at the $1 level. So while this was quite a volatile move, we can use a few tools to help. Predict the extent of some of these moves. One of them that I like to use is the Asia dealing range. So we have a standard deviation 1-to-1 extension, and we of the high between 8 o'clock and midnight. So we take the high and the low between 8 o'clock and midnight, and we draw a 1-to-1 extension, extending 3 standard deviations below the Asia range and 3 standard deviations above the Asia range. So this gives you extended targets for any move going into the next morning. As you can see here, the first standard deviation of the Asia range acts as resistance. Now this is also the previous day high, okay, and it is external range liquidity in this range. Okay, so price breaks down and moves towards the second standard deviation within the Asia range. Okay, so while we had that volatility playing out over on the dollar, we had a similar situation playing out over on the S&P 500. Okay, so on the news embargo at 8:30, price gaps down. Now, this is not something that a retail trader is really meant to be a participant in. This is aggressive repricing by algorithms. This is not something that you are going to be a participant in if you are a retail trader. Simple as that. Just learn to accept it. So price gaps down, creates a gap here on a 5-minute, and rallies up, and we already saw those external targets from the Asia dealing range. So price finds some support and eventually rallies and attempts to basically rebalance all of this aggressive repricing that happened, which it did. And I was talking about that on my Telegram. I said, have a look for a rebalance of this aggressive repricing. And the target was the 5-minute fair value gap and the real gap that you see down the side. So we'll just go over to Telegram. See, I was pointing that out real time. And I was just telling people to have a look for retracement back into lower levels before possibly move up. And over on Bitcoin, we can see the same time period on Wednesday play out in real time. So here we have 8:30 once again, lifting of the news embargo. So aggressive repricing. This becomes itself a target for algorithmic rebalance. So as price breaks down, sweeps external range liquidity and sell side liquidity, we move back up, quickly reprice all of this. Okay, then we retrace into a 5-minute fair value gap, something that I was also talking about on the Telegram, and we continue to make our way up. So as this was happening, as we had that big move down on Wednesday, that really cleared out some major liquidity pools, I was still remaining bullish on Bitcoin. And you hear in my last video, I was talking about that sentiment and that opinion I hold. If you go back to my last video, you'll hear me talking about that. I was telling you just to be a bit skeptical of all of the sort of negative news going around. So what I was talking about in that video is I was saying when there's a lot of fear and negativity as the general sentiment, you should have a look perhaps to fade that that bias. Okay, at least my idea and my opinion. One thing that gave me a lot of confluence in this decision was because I knew that at least on the S&P that we were going into a very an area that was going to offer a lot of support if we were going lower. So what I mean is, if you have a look here on the 1-hour chart, so price breaks down on Wednesday, okay, but this was the main area I was targeting, right? So we had equal lows here, and we had a fair value gap on the 1-hour. So price delivers really nicely to this area on Thursday. This happens also during New York kill zone, and the market delivers this move on Thursday. And with the model that we work within, we expect lows put in on Thursday and Friday if we're within a sell model. Okay, so this is the situation that plays out. This gives me a lot of reason to suspect we had strong support, and we're likely to push up higher going into the latter half of the week. But I'm not actually talking hindsight here. I posted this on Wednesday where I gave my high time frame targets for the rest of the week. So I just noted that above us at the time we had that drawn liquidity marked by relative equal highs. Below us we had that internal range liquidity. So what I was pointing here is that I expected price to likely retrace, at least targeting internal range liquidity before it makes a run for the external range liquidity marked by those relative equal highs. And you'll see that's pretty much how price plays out going into Thursday. So let's recap. So we had the volatility on the dollar on Wednesday, after which it pushed up into Thursday New York kill zone. At the same time, the S&P 500 was reaching for its own internal range liquidity and high time frame support, marked by a fair value gap on the 1 hour. And on Bitcoin, we see a strong performance against the other indexes. Yes, Thursday. So as price is retracing into that internal range target I was pointing out just before. At the same time, during the kill zone, the New York kill zone on Thursday morning, the S&P reaches for its high time frame support, and after finding support at these levels, price rallies in both indexes. In the case of Bitcoin, it targets and runs for external range liquidity marked by that by those relative equal highs. So the next thing I'd like to do is just go over the last few days of Bitcoin price action, and I'll be using key ICT concepts to frame and break down price action. Okay, so the first thing you should notice after we had that energetic distribution and repricing on Wednesday morning during New York kill zone, price quickly rallies, right, and rebalances all of that imbalance, at which point it retraces into a 5-minute fair value gap. And from there, it rallies again. In doing so, it creates a dealing range between this swing low, this swing high. At this point, we notice that Bitcoin is outperforming the indices, and we expect further bullish price action in Bitcoin. So as price retraces down into 50% equilibrium, therefore it's in the discount of the dealing range. And at this point, it is permissible to look for long position. So once again, I was asking on Telegram why this area provided a possible opportunity to go long. So what I was pointing out is that price was currently at a discount of the dealing range, but most importantly at the time, we are creating a bearish CVD divergence as positions were closing into the lower levels, and this was evident by the decrease in open interest. And from there, the next area I'd like to draw your attention to is this area here in the box. So this is, you'll see this is a 3-drive pattern. So this is one of the few sort of retail indicator patterns that I use. And if you go over on Telegram, I basically give a detailed explanation of why we use this pattern and what's the logic behind it. And from there, once again, Thursday morning during New York kill zone, as price retraces into that internal range liquidity, and the S&P 500 reaches support, Bitcoin rallies again. Then in the afternoon, we create the conditions for potential swing failure pattern. So as price reaches our drawn liquidity high time frame targets that we were discussing earlier, we create this fractal, or the beginnings of this fractal, which we anticipate is going to end in a swing failure pattern. And if you follow me over on Twitter, you'll know I was discussing this pattern. So here it is, and I'll just detailing the logic behind why this works. So if you want to have a look at that, you can go to my Twitter and check that out. And the last bit of price action I want to discuss in Bitcoin is this fractal that played out over Saturday. So we reach a further external range target marked by the 4-hour fair value gap. So if you have the time, go have a look on your own Bitcoin charts. if you can find that for our Fair Value Gap. All right, so from there, we create another 3 drafts pattern, and this is the beginning of what we call a search and destroy market profile. And with the search and destroy market profile, it ends in a swing failure pattern. So I'm busy working on the fractal for that piece of price action. The idea is that we first run our short-term liquidity marked by a 3 drafts pattern, then you create an area of accumulation, right? So at this point you induce buy stops above that accumulation and below it. So the normal idea is to run sell side liquidity, then run buy side liquidity. Sometimes you'll run sell side again, but eventually you will reach for the external range target, which is above the previous high marked by the 3 drafts pattern. So this will be your biggest pool of liquidity, and you expect a swing failure pattern at this level and for price to break down. So I'm busy working on the fractal for that piece of price action, which I'll release shortly. Okay, so I hope that this video was beneficial in your studies of ICT concepts in crypto. And like I said, if you wish to discuss any of these things further, well, you're welcome to join us on the Telegram channel or follow us on Twitter. Other than that, I will catch up with you guys perhaps on Wednesday or Friday. So until then, cheers.